I was thinking this morning about the opportunity that we all had in the early stages of the internet. And if we had recognized the guys with the picks and shovels, the Steve Jobs and the Jeff Bezos and the Mark Zuckerbergs and Bill Gates, if we had recognized them, we may not have become billionaires like they did, but we certainly would have become millionaires if we would have invested early on them. And as I'm looking at AI, I'm saying the same thing's happening all over again, is that we have this revolution of technology that's going to change the world so dramatically, and it's going to create the Bill Gates and the Steve Jobs and the Jeff Bezos and the Mark Zuckerbergs and the Elon Musk, the richest people in the world, all over again. And what we've got to do is look for those picks and shovels. And I think where you're going to find them right now is in the data centers, in the people who are building this infrastructure, much as Bill Gates, Steve Jobs, Jeff Bezos built the infrastructure of the internet. They're building the infrastructure of the AI revolution, and we need to recognize them. And they're pretty evident. I mean, and they fall into different categories. There are the processors of the data. And they are, of course, they're Micron, NVIDIA, and advanced micro devices. So those are companies we want to take a deep look at and say, is that something I want to invest in? Do they have the growth potential that I want to put my money there? Because I think if you look at what's happening in the data centers, they're tapped out. The influx that has come from AI and these large language processors, I'm experiencing what used to take me to analyze a stock, what used to take 4 minutes is now taking 4, 5, 6, 7 days. In fact, one of them is shut down because they can't keep up with it. So if I can find these stocks and identify them, I can make a lot of money. So then where else are they? Well, who's creating the servers? Well, that's pretty well known. It's Dell, it's Supermicro, and it's Hewlett Packard. So those are companies we need to really look into and say, are they the companies we think they are? And are they in a position to turn those revenues into profits, which will turn into increased stock prices? And then we look at those companies that are going to provide the power, and that means they're going to be looking at solar. This may be a little further down the line, but we got to put it on our radar and identify the companies and then put ourselves in a position to make a good investment decision. Now, who might that be? Well, Brookfield Renewables would be one, and then Next Era would be one. So we need to familiarize ourselves with it and say, is this where I want to put my money? And then something I've been playing a part of, I recognize very early on, is the need for liquid cooling. And that put me into Vertiv and Modine. So those are stocks we need to look at. Now, the question then becomes, which ones are going to take this earnings and turn it into, or revenues and turn it into profits? I'm confident that they'll all get revenues, but are they going to turn it into profits? And that is to say, are they financially healthy? What is their debt? What's their return on their equity? What's their return on their revenue? How efficient are they? How solvent are they? Are they going to be in a position that with the increase in the revenue that they have, that they can turn that into profits that then turn into increased earnings per share, that turn into increase in prices? So we have to look into their financials. We got to get access to their earnings statements and find out, are their earnings growing? Are their revenues growing? And are they hitting the rule of 40, where you add the growth in revenues and the growth in earnings together, and they exceed 40, that defines them as a growth company. But wait, are they also hitting scale? And that is to say, as those revenues grow, are their gross margins and then their operating margins growing equivalently so that they hit scale, and with every new dollar they make more profit, which then drives the price up. So they can be a good company, but if they aren't bringing it to the bottom line and leveraging it up, then their price isn't going to go up. They aren't going to be a Jeff Bezos and a Mark Zuckerberg. They're going to be a company that just grows its revenues and keeps up with its expenses, but doesn't grow its profits. So we don't want to invest in that. So we have to get back. We have to look for that. So it's gross margins as well as operating margins. And then what does that interpret into what their stock price is going to be in the future? And this is sustainability. We've got this growth pattern they're on. How are they going to be able to sustain it? And when are they going to max out? And when do we need to get out? And more importantly, what is their cash flow right now? And what is their fair value that interprets into what is the price that we want to buy them for? Well, this is a lot. I mean, it's easy enough to say this is a player, but is he a winner? Is he going to take us on a home run, or is he just going to walk to first base? Okay, so what I do is then take advantage of what's driving all this, and that is AI. I have created a relationship with an AI platform, and I call my agent Samantha, and we have built a prompt that's about 32 questions and 7 lines of data that I provide to her so that she can then answer those questions and answer all the questions I just gave you. Are their revenues growing? Are their earnings growing? Are they hitting the rule of 40? Are they solvent? Are they adding to their workforce so that they can take advantage of this opportunity? Or are they maxing out? And then put that in numbers that we can interpret and make good investment decisions. So what I do is put them in this document here on my website. I call it my cheat sheet or my tell sheet, because I think if you can understand the numbers, it will tell you what the stock's going to do, whether it's going to be its revenues grow, but because of the way it's structured, their earnings aren't going to grow. I mean, this is evident. Look at General Motors. They can grow their revenues, but they're never going to grow their profits because they're too overburdened with union employees, with high-paid executives, with brick and mortar, and high cost of doing business. So they can have a wonderful year and increase their revenues and sell a buttload of cars, but they aren't going to make any money. So we need to know that. And the only way we will know that is to get into their books. And I want to invite you to get into their books. Come with me, come to my website, take a look at how I'm analyzing these stocks, how I'm projecting what their revenues are growth, what their earnings growth, and that this is most important, what's the price of the stock going to be the first of this year, next year, the following year, and then when's it going to fall off a cliff? And if you don't go to their books every quarter, you'll never know. It'll hit you in the face and you'll say, what the hell just happened? You didn't go to the books. I mean, if you were buying any business in your community, the first thing you'd ask to see is their financial statements. And are they growing? And are they making money? And are they treating their employees well? And have they built a moat around themselves? Okay. This is a huge opportunity. This is another gift from the gods of finances. There are Bill Gates and Steve Jobs and Mark Zuckerbergs and the next Elon. They're all being created as we speak. You might be one of them. Or you might invest in 12 of them. Because what did you do? You went to their books and you came to understand the company and its financials better than anyone else. That in itself will make you a winner.